What's up, team? Sean from Vesta Live here. It's been a little while since I made a video, but I really had to do it today because I'm starting to lose my mind with the absolute craziness in and around investing, trading, stocks, equities, positions on Twitter. The amount of absolutely incorrect, misunderstood, possibly even worse information that's going out is absolutely mind-boggling, whether it's around equities or currencies or options or crypto or anything else for that matter. So I want to just share some thoughts and then share some easy, simple things you can do that could possibly help you get a better grasp of markets, how they work, how to think about them in different ways, and why it is so important to understand that who you get your information from and where you get your information from is as important as the information itself, because you might think you're getting great advice and misunderstanding the application of the advice. This isn't going to be a long video, so strap in for a few minutes here. First and foremost, if you do not have a background in finance, in accounting, in the markets, that's great. It means you get to start fresh and not have years of stuff that has changed and iterated upon. You can start now. But there's some core things that don't change. Corporate finance is corporate finance. Accounting is accounting. Sometimes there's little rule changes, but they don't affect the analysis and how you think about things. Much like technical analysis, is pretty much the same as it's been for a long time. So depending on whether you're an investor or you're a trader or you're somewhere in between, as long as you understand fundamentally what those things are, you're going to be okay. I'm going to share my screen and I want to show you an amazing resource to get tons of information for really cheap money. There's no affiliate links. There's no bull crap. You don't have to click any buttons. I don't care how you get this. I was just thinking of an easy and cheap place to go to get something. And it struck me that maybe this was an easy way to do it. So I'm going to share my screen and let me see where I share my screen from here. So of all places here, we're on eBay. Okay. I'm not logged in because I don't use eBay. Funny true story. Back in 06, I was an eBay power seller on a complete random reason that I'll share if anyone's interested in it, but really funny story there. So I was just thinking to myself, one of the best ways to get vetted information in and around these topics, okay, finance, accounting, etc., is to go to resources that require actual vetting. So one of the things that I like to think about is like college textbooks. They're not perfect, okay, and they do need to be updated over certain amounts of time, but for the most part, you're getting relatively accurate information. And this is about creating a baseline of education that you can build upon with your own study, your own due diligence, etc. So I just want to do a quick exercise here and see. You can see I was just testing this out to make sure it was going to work. And I was looking at finance, but let's do economics. Okay, cool. Let's see what pops out here. Let me see. Let's even do this. Cool. So here's a perfect example of like all kinds of used textbooks around all kinds of different oh, this is actually great. Look at this. And some of it's pretty cheap. Some of these are too much money, but just as an example, there are well-vetted used copies of books that you can grab for under $10 that are going to have all of the primary concepts in and around economics, finance, accounting, whatever it might be, right? And I think that this is a great example of like vetted information that at a minimum we know was taught to people who work in the field or at least got degrees off of these things. I know I'm not one that says everything has to be perfectly right, but you're building fundamentals, right? Even as I'm just rolling here like college mathematics for business, this is actually pretty cool too. So lots of stuff in here. I'm not saying you have to do anything. You don't have to do anything. Try to buy within at least the past couple of years, but at least be on the same footing of the people who do this professionally and get your information from relatively the same sources, right? Why not? If you're trying to be an investor or a trader and you don't have a background in that world, at least start with the basics. I mean, for me to be a painter, I have to at least have some paint, some brushes, and an easel and know how to set those things up and understand some basics about lighting. That doesn't make me a good artist, but at least those are the fundamentals to be able to start. So that's just number one. Make sure you're on even footing and getting information from an actual, verifiable, veritable source that has been used before. A used college textbook means at one point it was taught by a professor in a classroom. Not a bad place to start, super cheap. The other thing I really like, team, you have to use terminology as it applies to the use case it's being used in. As an example, people love to quote Warren Buffett which frankly drives me crazy, because although Warren Buffett is clearly a genius, he did not become wealthy because he was buying stocks in the market. It was based on all the things he did before that, before transitioning into being a massive global Berkshire Hathaway of today. But neither here nor there, his teachings still remain valuable nonetheless. When someone says buy low and sell high, that is great. That's great information for an investor, right? When there's blood in the streets, buy. Great. But too many people misunderstand that investing is about getting into a position for the long term and riding it up over time. This is supported by expansionary efforts in the markets, in the economy. This is inflation. There's a lot of great reasons why being a long-term investor make a ton of sense. An overarching approach to buying good, strong, valuable companies with good businesses and oftentimes profitable businesses is a great way to be long-term in the market. You keep adding as you go. You continuously build your positions, reinvest your dividends. That's great. That is what probably 99% plus of people should be doing. It makes a ton of sense. Whether you do it with individual stocks or ETFs or indexes, great, right? Avoid margin, be aware of tax issues, use a 401k or an IRA, whatever, right? It's not about advice. It's just general, like, understand that makes sense. One of the things that is really, I'm seeing popping up, unfortunately, constantly on Twitter is this massive misunderstanding of why terminology within investing versus trading is so different. So I want to switch gears to trading. In trading, you do not buy low and sell high. That is a misnomer that is completely incorrect and leads to people losing tons of money. The reason why traders typically almost always lose money, and I'm talking retail traders here, because they do not understand the way professional traders, institutional traders, people who run funds make their money in the markets, okay? When you are a trader, you are literally buying high so that you can sell higher, okay? And sometimes we say sell low. It's because you have to understand a trade is not a one-way direction. It's directionality. Do I see movement, momentum, a trend forming in a position, going up, going down, going sideways, right? That's why when you see things like buy high and sell low, that is 100% accurate for a trader. A trader is looking for, and I'm not talking about scalping here, by the way. Scalping is when you try to jump in and jump out and make tiny little fractions. And people on Twitter, by the way, love to talk about how much money they make scalping. There is almost no actual data that suggests this is much more than an anomaly for the average person. The reason isn't because you're not smart. It's nothing to do with your education. It's not the effort you're putting in. You are competing with HFTs, or what's known as high frequency traders, which are often computer-based algorithms at scale that are constantly able to look and see teeny tiny transactions in milliseconds before you do, execute on those trades. You become their exit capital, and they're already out before you've even gotten into your position fully. That's not a game that's easy to win. One of the best ways to think about building massive and sustained wealth, and I'm not pulling this out of thin air, this is how I've done it for years. Think about the trends in the markets, when things are going up, when things are going down, when they're going sideways in channels, okay? Understanding trends, how to read and take action on a trend is extremely important. This is not a detailed video on building and understanding trends, but I want to at least address the terminology and why it's being misunderstood. To identify and act on a trend means that 90% of the time, I might have no positions or any trades open whatsoever. My play is looking for an entry based on several identifiers that represent what I believe will be an ongoing trend in a strong direction. And if I'm wrong, I'm out quick. Trailing losses, stop losses, whatever. But you want to understand what your exit is as soon as you get in from a risk management position. Now, the reason we say buy high and sell low, which is totally misunderstood, is because what you're looking for is in short time periods. When I see a stock that maybe has been moving sideways for a long time or has been going down, like we're in a real bad downtrend in our economy right now. And until that trend changes, I'm staying short on everything. I'm making my money on the way down. If that starts to level off, or I start to see glimpses of a change, then I'm out. I'm taking my profits and I'm going to reassess until I have confirmation of a new trend. Okay. Now, the reason this is nuanced is because when we say things like buy high and sell low, that's 100% accurate. But you have to understand that's going long and going short. And what they're saying is if I look at the recent price activity of an equity, a currency, futures, crypto, anything, it doesn't matter, bonds, interest rates, whatever market, because a good trend trader trades all markets. When I see the stuff that are like, oh, I specialize in this, I specialize in that, like, no, you don't. Unless you work for a major institutional bank or a hedge fund, and that's what you do full time, which, let's be honest, these people are selling courses, they're not full-time traders. Those are the people you want to run away from and ignore the advice you're getting, because it's obviously garbage. Buy high means that over a time period that you have studied and works for your math, what you're looking at is maybe it's a week, 2 weeks, or a month. I want to see successive highs in the thing that I'm looking at. We'll call it a stock for the sake of conversation, but it could be anything. So just call it like SPY, right? Total random large global ETF. What I want to see is, are we continuously seeing it hit a recent high and then maybe a few days later hit another high, a few days later hit another high? That's giving me some degree of conviction that trend upwards might be beginning. So I want to buy on the highs, but those are recent highs. Those highs will help me to confirm it's a lot more than just this basic stuff, but they help me to confirm there could be a new direction in the stock. So I might begin to execute on a position at a small size just to get started, and it's small relative to my portfolio and my risk management. And what I'm going to do is, as soon as I see a deviation backwards or start to reverse what I believe is the trend, I'm out. No harm done. Because the goal with this is to ride the wave all the way to the next trend and profit the entire way. If I'm wrong, or my math is wrong, or the TA changes, I'm out. The reason we say sell low is it's the opposite. If I see successive and continuous lower lows, that's a great sign to me that we are in a trend on the downside. So a case like that, what I'm going to do is I'm going to start shorting, or maybe use puts, whatever you want to use, right? And I'm not suggesting anyone does this, by the way, but I think there's a lot of traders who are trying to do this and they're doing it wrong. So I'm entering a position short on lower lows. That's my conviction point that I believe we're in a trend. So I am happy to go into more detail on this, but I think it's really important to understand, when you see something like buy low and sell high, bingo, makes total sense. When I see buy high and sell low, well, that also makes sense. You're just missing the context of the statement. Is it investor or trader? And I'll give you a perfect example of a really popular stock that I talk about often. Back when Palantir was sort of in the high teens, I started putting out videos on a regular basis about hedging the downside. There's downside risk. There's a trend forming. I started going short against any equity positions I had at the time, which I really didn't. But, I'm an options player, so for me, it's different to approach the markets than I think the average person. I started leveraging puts, or what I would do is marry them up against any positions. Or if I wasn't sure on the directionality or didn't have conviction or confirmation, what I might do is look at straddles, right? Where I'm playing an unknown up or downside, but believe it's going to be explosive either way. There are so many ways to do this. And now looking at Palantir is a great example. Their business has not changed. Fundamentally, they're bringing on more customers than ever, it seems. Their valuation, however, as a market price, has been getting hammered along with the rest of the economy. So for me, whether I like the company, I hate the company, I'm indifferent towards the company, I just want to make money on the stock price. It doesn't affect what the company does or doesn't do. So I see that it's going to go down. There you go. I did something very similar around the company Upstart around $100, where I started really saying, like, this is going to go down. This is a problem. This is the wrong thing to be in. And we watched that thing come all the way down. I just recently posted on Twitter that I was doing this on Opendoor, where I was getting into put positions because I believed it was going to start to crash. And again, I was called out, like I often am, which is fine, about like, well, why didn't you post about it? And I shared all the videos that were showing that I did. And the only reason I do this is because I don't want you to lose money. It really does matter to me, whether it's rational or not, that the folks who watch this stuff understand I want you to be successful, but success doesn't only go in one direction in the markets. If you are in the 99% that is buying and holding, hell yeah, more power to you. That's the right thing to do for almost everybody. But if you are a trader, whether it's equities, currencies, cryptos, or interest rates, or you're trading via standard equity trades or options or futures, that is why it matters to know, for the big kinds of momentum, swing, and trend trading, all the same, by the way, that you're looking for conviction in direction and you're acting on the direction. That's why we say buy high and sell low, because selling is a verb, right? I'm actually taking action. I'm not exiting. So team, with that, I would love feedback on the video. I just felt like this was really something being led down the wrong path for a lot of people. So I wanted to share some thoughts. I didn't mean for it to be this long. And I know it's been a while since I posted, but I just couldn't hold this in anymore. So team, as usual, thanks so much. I appreciate you. I hope you're successful out there, and give it time. You got to learn to do these things. You're doing great. Thanks so much for watching. See you later.